Good afternoon. Welcome to GrainTV. My name's Cody Bills. This is Logan Burgess. Today is Friday, February 28th, and we had the markets moving higher here today. Take a look at the close. Corn trading up 9 cents. Soybeans for the May contract trading up 24 cents. Wheat in Chicago up 13 cents. And Kansas City wheat trading up 8.5 cents here. Logan, maybe you could break down the trade action today. Yep. Very confusing price action in the last couple of days. Where does that leave us?
Yeah, let's take a look here at the May soybean contract. You can see here we're looking at a 5-minute chart. So each one of these candlesticks here represents 5 minutes worth of trade action. And as you can see toward the middle of this chart, we saw strength early in the trade session. We sold off for about an hour. It looked like the market was going to move lower, but then we found a lot of buying interest going toward the close, and we closed right near the high trade of the day. So once again, exceptional strength out of the soybean market. You know, Cody, I know yesterday we talked about kind of the bearish indications that we saw yesterday in the trade action. A close like today, what does that kind of tell you about this market here moving forward?
Well, it's certainly not the confirmation of the bearish pattern that we saw yesterday. We were looking for a lower open and a lower close here to kind of confirm that bearish indicator that we saw yesterday. Unfortunately, we did not get that. Well, not necessarily unfortunately, but it definitely adds more confusion to this. I think one thing that we got to keep in mind is it is a rolling period. So we are rolling from that March contract into the May contract, and it is also a Friday, and sometimes that kind of stirs the pot in a confusing manner. The one thing we can take away from this is the last couple of days we have seen increased volatility, and that sort of confusion is not necessarily good when you're looking at trend continuation. When you look at that sort of volatility, it's following a very sharp move. I would think that this is more of an indication that perhaps this trend is going to change, and we may see that start to develop earlier next week.
You know, if we look at kind of the fundamentals in the bean market today, we did have a large private analyst out of Brazil slash their Brazilian production expectation by 5 million tons to 86.1 million tons. So that's at kind of the lower end of expectations that we've seen, but largely the Brazilian production issues have been baked into the price here at this point, so not a big driver there. One thing though that I think is important to take a look at in today's action was significant weakness out of the dollar index. Take a look here at the March dollar index daily chart, and as you can see here, we had a sharply lower move today, off about half a point, which is a pretty large move for the dollar index. Today we saw the lowest close that we've seen since October. So in general, weakness out of the dollar is going to be supportive of commodities in general. But when you look at the grain market in particular right now, this is a market that's been very focused on export sales. And when you talk about a weaker dollar index, you talk about U.S. grain being more competitive on the world front. So right now this comes at kind of a good time for the grain market. And I think in particular that's why we saw today's lower move in the dollar index spill over into strength for corn, soybeans, and wheat.
You know, when you look at the cash market, this is something we like to do on a Friday. We're taking a look at the last week's changes. And one of the things that we noticed is soybeans lost about 8 cents in terms of basis in the cash market, where corn was unchanged. Now, one of the main reasons for this, I think, is the very strong rally in soybeans that corn did not experience. When you look at this chart here, you'll notice the marker 1 and the marker 2. Marker 1 is where we started off the week. Marker 2 is where we closed off the week. You can see we made some incredible gains here in soybeans, and that really draws grain out of producers' bins and really allows elevators to kind of back off that basis. When you look at corn, the change just wasn't that significant. One of the reasons why we were unchanged on the week. Yep. One last thing to note here is that we did see barge rates rise along the river, and those barge rates rising along the river, coupled with the fact that we did see a rally in the futures market, is one of the reasons why the river market was hurt this week in the cash market.
You know, this barge rate story is going to be something to follow here in the coming months, Cody. I know yesterday on the show we talked about how much corn the U.S. has sold, but how little relative to the last 5 years has actually left the country. So this barge rate story is going to remain important here, both for basis and the futures market in the months to come. As I said, we'll help keep you posted on that here on GrainTV. In general, though, that kind of wraps up what we saw here for the week. Very volatile week, very positive for soybeans. We'll have to see if it can continue at 7 p.m. Central Time Sunday night when the markets open back up. If you want to see live quotes for yourself Sunday night, visit us over at grainhedge.com. You can take a no-obligation demo there. Thanks a lot for joining us. We'll see you back here on Monday.